a question came up by a member at Turbo Trading on how do we draw downtrending channel lines. We're always very good at doing the uptrending, but how do we do downtrending channels, and how does that, where do you look at to short stocks if that's the case? So this is SAVA. They were upgraded by one of the big houses after selling off. I mean, it's a great chart. It was a great chart. Come on, do it. Here we go. And big gap up, flag gapped up, rolled over. Here's the release of the news that of an upgrade, and then today we get a big reversal bar on it. So it's too bad, but that's it is what it is. So we get this pop, and then I draw these lines on here, and I say this is in a downtrending channel. If there's a pop, you want to short it, because this pattern on the downtrend is 90% effective. Normally our patterns we're looking at are 70% effective. This one is at least 90% effective, probably 95%. Anyways, so when we're drawing a chart, when we draw a pattern on a chart in the uptrend, normally what you do is you draw it on the bottom line here like this, and then you make a parallel line, and that gives you the top of the channel, and you try and join as many dots as possible. Well, on the other side, on the downside, you normally try to join the lines at the top of the channel. Now in the pre-market, it's a bit choppy, so it's a bit difficult to get them exact. But let's say that's the line there like that, and then you just make another parallel line to it, and it looks something like that. So there's your downtrending channel. And sure enough, at the opening, it does take a bit of a spike, and then off it continues to drift. Now, so this brings in the second part of the question. How do you short it? Well, there's a few ways you can do. We know that this is going to go down. So what we're going to look for is an opportunity, excuse me, to enter this on the short side. So we'll look for support resistance areas. We can see that this popped, held support here, failed, got back up, and kept hitting up against this and failed. So there's your resistance at 11. So what you're watching for is when the stock opens, number one, short it when it gets to the downtrending channel line, which may have been more like, so they draw it so it would be like that. There's your parallel channel, like that. So short it when it gets to this channel line, which was here, or when it gets to resistance, which was here. So you could have started your short here at the 1080, shorted more at 11, looked to cover it if it went over 11 and a quarter, maybe 11.40. That would have been your risk, 11 and a quarter. But it fails at the 11 and comes off and then just drifts the rest of the day. Where do you cover? Well, you cover when it at the bottom of the channel. It sells off, lots of opportunities to cover it, breaks down through it, double bottoms in here. You probably want to be out of the trade. But, if it pops again, you could short into it and buy at the bottom of the channel. You have to adjust the channel all the time, and as it traded down there, that's your new channel line. And so we'd look for this to trade back down to 9, double bottom in there. So it's the same. This is the difference between an uptrend and a downtrend is we normally draw the trend line at the top of the channel first, and then make the parallel line and put it at the bottom. And where do you short? You always short at resistance. And you know that this pattern is 90% effective. And sure enough, at 11, there's a $2 move for it to trade down to 9.